The Real Build is about building better culture, leaders, visionaries, community to better serve the client. I'm your host, Bill Reiman, your broker builder, and I'm here to showcase real business owners building companies with integrity, trust, and a commitment to making a positive impact. Join us as we explore their stories, insights, and strategies for success. With that being said, welcome to The Real Build.
You leave this world behind, so live a life you will remember.
Welcome to The Real Build. I'm your host, Bill Reiman, your broker builder, and today I got another amazing guest on the show for you. He's an experienced consultant with a demonstrated history of working in the financial services industry, skilled in banking, sales, business development, entrepreneurship, and strategic planning. He's a strong consulting professional with a Bachelor of Science focused in economics from Stony Brook University. He is the owner of Integrated Business Financing. Jonathan Fedora, welcome to The Real Build. How you doing, brother?
Hey, brother, how's it going? That's probably the longest intro for me I have heard on any show I've been part of, so I'm honored and I'm going to try to live up to that.
Perfect, man. Now I'm
I was,
excited to have you on to talk some financing solutions for businesses, especially in the construction industry. You and I were supposed to do this yesterday, and we started chatting it up, and it's I'm excited to have you on, man. You have a world of knowledge in this industry, and you'll definitely help some of the listeners out there as well. You know, my audience, like, I got a lot of construction guys that listen. I got a lot of people looking to build houses and what to look for in these industries, in your industries too, and in the real estate world as well. So excited to have you. But before we get started, let's find out a little bit more about you. So who is Jonathan Fedora?
well, it's taken me a long time to figure that out, right? I knew I liked helping people. I love my kids. I love playing hockey. I love anything and anything related to the water, the ocean, the beach. That is how I calm down. But who am I? I am an entrepreneur that is trying to help and support a ton of small businesses all across the country. And I do that because when you help an entrepreneur, you don't just help that person, you also help their family, their employees' families, and then all the community that they serve, right? That's why most of us do what we do. And because we're such a big part of the economy, right? That's a massive focus, and we actually make up the majority of GDP. So that's what I do. But what I like, I love God. I love hanging out with my family. That's it. I'm like down to earth. Just want to spend more time with my family, like most other people, and and then obviously help as many people as I can with integrated business financing. That's me.
I love it, man. The key thing right there, obviously family first, obviously, but and God first too. But the key thing I got out of that too is you want to help people. And I think that's a huge difference maker with you and your business too. There's a lot of people in your industry. You and I talked about this yesterday. There's a lot of people in both our industries that are just out
Mhm.
there to make the money. They don't care. They don't have a heart. They don't care about the end result. They just want the money in their pocket. Um, I see you as a difference maker because you actually care. You're out there to help entrepreneurs build businesses too. So talk about a little bit what inspired you to start integrated business financing. Like, what was the key thing? How'd you get into it? How'd you start it?
That's a great question. And the reality is this, the the answer of when I left the traditional workforce was I had three experiences where I went and worked for a lending firm. I crushed whatever they asked me to do, I crushed it. And then it got time to get bonused, pay, get commission, whatever the agreement was. One particular example, it was me getting a lot of vested equity in the company. Another one, it was The guy didn't want to pay me out that much, even though it was clear, and that's exactly what I earned. And so I kept going into these situations where I kept outperforming what these firms were wanting me to do. And then somehow I would either get fired before the options vest, because there was a hostile takeover. They just did not want to pay me what I was worth. And so I left. And then what I did, because I went to so many, I worked at, let's say, at worked or consulted for five or six of the bigger firms. I realized that not one of them actually had anything figured out, right? And what I mean by that is they cared about them. They didn't care about their clients.
Mm.
And so when I founded Integrated, I thought to myself, because I have run small businesses and I've spoken to I don't know how many small business owners over the 15 years, but I put myself in their shoes and I asked myself, what would I want? How would I want to be treated? What options would I want? How would I want someone to work with me? Would I want it to be a transaction, or would I want it to be a little bit of consulting and people that actually care? Right. And so when I put that together, I tried to reverse engineer it. And believe it or not, I came up with integrated. I didn't come up with integrated on the first iteration. It was a company called Sprout Lending. We had, me and my partners had a difference of opinion. I left. Came with me. So apparently my opinion was a little bit more valuable. And I'm not saying more valuable, less valuable, just it is what it was. And we rebranded into integrated. And we're I think year three or year four of integrated. And doing really well and making that difference, making the difference we set out to make, just not at the scale I am going to be happy with yet.
Mm.
When I say scale, I mean it's going to be a household name.
Mhm.
Okay, what do you need? Oh, you need a line of credit, integrated. You need an SBA loan, integrated. That's that's how I need this company to be.
I have no doubt, man. Just listening to just the first two things you said too. You're there to help people, but then one thing that stuck out there too is you put yourself in other people's shoes too. As a business owner, a lot of business owners don't think that way. And it's you think it's easy to just think that way, like that's why you're starting a business, like you're pissed off at because of the crappy work
Yep.
that's out there
Yeah.
and you want to make a difference and you want to change it. And it's like with us on the building side too, it's like put ourselves in the client's shoes. I've had so many clients, man, that we're building their second, third home. Their
Yep.
first experiences were horrible.
Yep.
And it's like, how can we better that experience to gain their trust? Because their trust going into it isn't that great because they've already been screwed once. So
Yep.
it's like, how can we show them that this is in every industry, right?
It's almost like there's additional friction or additional challenges or steps when you deal with that. And we deal with that a lot because when I say that most people have had bad experiences in getting financing, and there's a couple reasons for that. I'm happy to explain it. Uh, I mean, I would say 85% of the people that go looking usually have a bad experience. Here's why. First off, the marketing techniques and what people can track are so strong, right, that a lot of companies will wind up buying that data and just staying in front of you or just nonstop soliciting until you decide to move forward. The other thing that people don't realize is there's a lot of these like review sites, and I think it should be illegal. They're trying to compare different companies, and then they'll rank them, and then they'll give you a link to apply. Well, guess what? Any link on there is a paid link, even though it looks like you're going through to a unbiased review, right? They're actually funneling you to multiple different lenders.
Mm.
And then there's a lot of times that people look like they're a direct lending outfit. And by the way, guys, there's no difference between a direct lender, in my opinion, or a marketplace or a firm like ours. And I'll get into that in a little bit right after this, actually. Let me finish this thought. So what happens is you go to like a lead aggregator when you're searching online, and now not only are you getting your information sold, it's getting sold to 4 to 8. 8, maybe as much as 10 people at one time. And then in a week or two, it'll get resold. And then in 30 days, it'll get resold. And that's why when people go on their own, they have those experiences. And a lot of times, the people that are buying those leads, they're not banks. Like Chase isn't going to buy those leads. I'm not going to buy those leads. All right. Who's buying those leads? Cash advance companies. And so then you're getting propositioned for quick, fast, expensive money that could hurt your cash flow. And I'm not saying we don't have that program. We actually offer that program, but we do it in an ethical way. And it's a way of last resorts, meaning if I couldn't do anything else based on all these criteria, by the way, Bill, this is what you have to fix in the future so you can get into this program, but this is what we can get you now, right? And this is how I would spend that money. So there are times that we wind up there with clients. We just try not to, right? And we don't lead with that. We do all the other programs, but that's why people have bad experiences. And then what people do is these firms lie. Okay. A lot of people will say, hey, you have to do this and this in order to get Y down the road. And a lot of times that's not accurate. It's not even remotely accurate. Um, and because people don't know how lending works, they they do it, and now they have to dig out of these financial positions and financial holes that uh, it's hard enough to run a business. You don't need somebody else putting you in a tougher situation than you were going to be in, right?
Mhm.
And so this happens a lot. And then I wind up I find these people because they're recommended to me. Like 95% of my business is word of mouth. They come in and then I have to fix this and I have to backtrack and I have to see what's really going on. And a lot of this comes down to the differences in process, the differences in programs, and having that educational piece to lending and to actually showing people how to grow their business and, you know, putting it all together. So that's really one of the biggest reasons why people have trouble is because they go with a basic type of search and they go through like the cash advance space. And that is a hard space to have anything happen in. Like it's tough. And then what happens is they put a lien or you get a UCC lien. So any type of financing that you do, you usually get what's called a lien placed on the business, which is a UCC line of credit. That happens too. By the way, SBA loan that happens. But an SBA loan, people aren't looking for. A line of credit, most people aren't looking for. What they do is they look at the cash advance UCCs, and then a lot of people call them, and they call them, let's say, 5, 10, 20 times a day, right? And then they get into this rut where they're getting all these inbound phone calls for money. People are lying to them that are calling them saying, hey, we bought or took over your account. We'll get you more money. And all they're doing is breaching contracts. So we work in a very, very toxic and awful space. And I don't want to like simplify my strategy of just treating people the way I want to be treated, but it literally boils down to treat people the way you want to be treated and do the right thing. And that's why I have the word of mouth that I have, right? That's why I was able to build this. And we don't really spend a lot of money on ads because every single person here does the right thing. And every single person here really tries to help that entrepreneur. So, in a nutshell, that's why people have had bad experiences lending or borrowing, I should say.
You're playing the long term game too,
Yeah.
man. I mean, that's it's plain and simple. You're doing it the right way, which is it's a long term strategy too, but it's word of mouth, it's reputation, it's building a long term reputation that's going to hold, and
Yeah.
instead of turning and burning. I mean, that's our industries are very similar, unfortunately. With construction too, it's a lot of turn burn, a lot of we were talking about with your personal house too, and just the problems facing with contractors that tell you one thing and then they don't show up, right? And
Yeah.
it's just a lot of people unfortunately deal with that in your industry and my industry too. So how do we change that? We just be
Uh,
honest, we do the right thing, we got integrity and we show
I'll,
up when we say we're
I'll
going to show up.
I'll tell you some way I'm changing it. And I haven't I came out with this program and then I had to shelve it and I'm relaunching it in January. So it's a perfect time. Wasn't going to bring it up, but I'll bring it up. So I am so tired of the industry noise, right? Because I have internal sales, like guys that work in my office that are completely, this is what they do, 8 a.m. to 6 p.m. And then I have outside agents. Well, those outside agents, I won't take on just anybody. And I want them to go through my training. I want them to understand my process, our philosophies, our core values, our culture. And so I came up with capital gains. At first, I did this with somebody else that was an influencer. He decided that he saw how good it worked, that he was going to kill the program after it did 300,000 in sales with no ads. He killed the program, took it over internally, re took all my content and rebranded it his. You know this person too, by the way. Complete and utter trash bag. And he came up with he called it closer capital.
Yeah.
And instead of working with me, now he tries to compete with me. But what he doesn't understand is I do mostly SBAs, equipment financing, and real bankable programs, and all he offers is cash advance. Well, if you're using all of my systems, but you don't have the actual programs
Mm.
that correspond with them, how do you think that's going to work out? So it'll take him another year to figure that out. And I'm relaunching Capital Gains, calling it Capital Gains University, and it's 10 times more and 10 times better than the original one. All right. And this is going to teach people how to operate and work in my space ethically and actually help people and actually care instead of what he turned the other program into. So
Yeah.
that is how I'm doing it. And I'm sure there may be a similar avenue for you to clean up your industry a little bit.
Oh yeah, definitely. 100%. No, that's a great idea too. And like I said, we relate in a lot of ways in both these industries because there's just it's a lot of scumbags in it, that's for sure too. I want to go into with you too, like obviously you're delivering a better experience too. And so obviously on the contractor side, we'll do all businesses because they all kind of relate in a way to, how do you guide people to have that better experience? Let's go a little bit more into detail of that when doing financing and SBA loans or whatever they choose to do.
We can go real deep, actually.
Yeah.
All right. So I have a 5-step process. We call it a 5-call process, right? I only need to get into the first two to actually show you how much different it is than even a bank. Okay. So the first call is discovery. Everyone has a list of items, questions, information we need. Basically, anybody, you don't need a lending background. You get these answers, gives us enough clarity into a starting point, right? Based on that, we send out an application. Our basic application, this does not account for all programs. This is just a basic starting point. Typically, application, 12 months of banks, 2 months of payment processing statements, year-to-date financials, AR, AP, 2 years of business tax returns, 2 years of personal tax returns. That's an amazing base. That's actually a little enhanced. We usually do six and one tax return, but we get all this information back and then we put it through the same softwares that the banks use. Okay. So the cash flow softwares, or doesn't make a difference which one we're using. All right. I don't want to give everything away. We pull personal credit. By the way, when we pull credit, it's a soft pull, it doesn't impact anything. Then we do business credit. And then we put all this information into a cash flow sheet and we show somebody's business 6 months or 12 months of money in, money out, deposits, average daily balances, negative days, trends, where their credit stacks up, what their projections are. Okay. And then we actually send it to them and we review it. So that's our second step. And so what you and I would do if you were applying, let's say for an SBA loan or for anything, let's say a piece of equipment, Me and you are going to run through that probably 15, 20 minutes. I'm going to understand your business at a much
Mm,
higher level. By the way, by the time we're done with it, you're probably going to understand your business from a much, much higher level. All
mm,
right. And now, if you think about this, there's real costs in that. Like for every one of those checklists, we call them a checklist that we do, it's probably costing me about 100, $150. Okay. It's not cheap. We send that to them, we strategize, and then what we do is we get it scored out with certain lenders, depending on what type of program they want. So if it's invoice factoring, you'll probably get a term sheet in 24 hours. SBA, that's obviously going to be a little bit longer. Line of credit, we can get done pretty quick. Equipment financing, we can get done pretty quick. And not even going into the other programs. So basically, we get either the term sheet or the pre-approval and a bunch of options. We would bring it back to you and say, "Hey, Bill, this is kind of how you're scoring out. This is what I think we can get approved." Obviously, I'm not going to tell you these are done deals because there's never a done deal until the money is in your account. But these are the options. What questions do you have? You come back, you ask me a bunch of questions. Based on those questions, and I'm going to either guide you or you're going to pick one of the options. But for the most part, if I know someone's making a mistake, I will flat out tell them.
mm.
Okay. Because there are certain times that one program might look better than another, but I just know how they function over the long term and I will make whatever adjustments. But for the most part, these are self-guided decisions where there's no pressure. Okay. And why do I say that? Because nobody likes to be sold. Everyone just wants help. And that's what we do. And this has resonated with a lot of people. It's helped a lot of people. Uh, that's really our process. So that's why we're different because no one does that little consulting piece. No one actually shows them where the business
Yeah.
is. And let's say we wound up in a subprime or not optimal program. Do you know what the first thing I'm doing is? I have someone that can help you with your business credit. I have a bunch of firms that'll help you with your personal credit. So I'm going to tell you, hey, Bill, I can get you about a quarter mil or 250 today. I know you were looking for 200. Take the 250. And I'm telling you to take the 250 because you can use the 200 how you wanted to grow your business. But take the 50,000 and put 10 of it towards building your business credit. Put 20 of it towards boosting your personal credit. And then maybe take this 20 and dump it into, this service. And our clients get much better results. Why? Because we've seen it so many times. That's really the difference. Like, I'm not a rocket science. If I see 100 applications for HVAC companies a month looking for different financing, obviously I'm going to pick up trends,
Mhm.
right? Like you'd have to be brain dead not to. Well, that's what I've been doing for 15 years. So you kind of just see the same situations over and over. And it's just like connecting the dots for people. And that's all we do.
I love the consulting side of it too, because you really don't get that. And like you just said too, it's like a lot of business owners, a lot of people in general, they don't understand financing. I mean, when I went to college, I hated finance, and
Yeah.
I'm not a math guy. I never have been, and it's a very hard thing to understand, which is sad in this country that we're not really taught finance from the beginning, or
None of it.
financial stability and how to spend your money. Nobody is. It's kind of a sad thing, but um, it's a great asset that you've added to your business of consulting and teaching people and showing them, okay, this is where you are, this is where you can be, this is how much you're going to spend, this is where you can take this and build the credit side, and so on and so on. So, get into that a little bit more too, as far as like the credit, like business credit side. How does it affect the ability to scale a business? How does somebody build better credit on that end? And
Yeah, yeah, yeah.
yeah, get into
Cool.
that a little bit.
Okay, so first, anything that you guys want, like if anyone wants like a higher level baseline education in what's available, check out Capital Tools. It's a program I have. It was originally like 500 or 1,000. I put it at 97 bucks because I just want people to have it. And it goes through every lending program available,
Mhm.
business credit, and you know, it's probably about 10 to 20 hours of just gold when it comes to growth strategies and financing strategies and what businesses should be doing.
I'll
But
definitely link that too. I'll put a link
yeah,
to it.
so but business credit is it's important, and I don't think it's what everyone makes it out to be. Okay, here's what I mean by that. You got a lot of people selling it for 3,000, for 5,000, for reoccurring. I see people charge $1,000 a month. Okay, I don't think it's that um, big of a factor. It is a massive factor, and it is very important. But it's important because it separates your business and personal credit to a degree. It will help you establish trade lines. It'll help you get terms from suppliers and vendors. And it will help you certain municipalities, right? And government jobs, they will pull your business credit and you need a credit high enough to be able to bid a large job. Okay. So yes, it does impact you in those ways. It also comes into a play big time when it comes to equipment financing. So if you are an equipment intensive business, this is something that you absolutely need. Or if you're going to buy a bunch of vehicles, business credit is very, very important. It's also important for SBA loans. What will business credit not do? It will not make it so you never have to have your personal credit run again. Okay. That's what people sell it as. And I will never, ever say that. Okay. I get into fights with experts, okay, it's quote unquote other experts because they say this shit. The reality is, the only time I've ever seen it work where it's application like business credit only is if you have something like a 90 or 100 paydex score, which is basically perfect. You have 7 years in business and 14 active trade lines. Then you can use the business credit only. And I've only seen that for equipment financing. So I don't like when people make a blanket statement when that is not actually accurate, right?
Mhm.
Because you could be telling this guy, this poor guy that has a, seven-figure business, don't worry about your personal credit. So he's in the low 600s, maybe high 500s, and he's using, less than stellar financing lines, and it's stunting his growth.
Mhm.
Why? Because someone said just focus on the business credit. Terrible fucking advice, right? Can
Mhm.
I curse on this podcast?
Yeah.
All right, sorry. Yeah,
You're
terrible
good.
advice, right? Yeah, too late. Um, but this is what we run into, and this is what I see all the time, and it's annoying and it's frustrating because, like, this is somebody that had he not been lied to, he would have been in a better position. And I would have been even, I'd be able to help him even more, than what I can today. Right. So so many times I have to go back and fix things before I can actually get them what they need. And that's frustrating. So, how do you build business credit? Well, let's start at checking business credit. You're going to go to DNB, the easiest way, go to dnb.com. All right.
Mhm.
And pull up your information. If it is not claimed, you want to make sure you claim it. There's going to be probably 20, 30% of you that are doing this, that you're going to go on the site, it's not claimed, claim it right away. And then you want to make sure you have the five fundability factors squared away. Some of you are going to laugh, think this is simple. It's very simple, guys, but I can tell you that if I went through all the applications I've had this month, 40 to 50% of them have this wrong. So we're going to go into it. One, and this one everyone should have right. Have a business bank account. Two, have a business phone number. Your business phone number cannot be a Google Voice number. All right. It has to be registered to the business. So have that phone number. Next, have a business email. I'm not talking about Jonathan finances businesses at Gmail. Okay. It's Jonathan at integratedbusinessfinancing.com. Get the domain, be a big boy, pay the 12 bucks a month. Make sure you have that. Have a business address. This address can be home. It cannot, you know what it can't be? It can't be a PO box.
Mhm.
Okay. If you put a PO box on any financing application, you are asking to get declined. That is the highest indicator of fraud anyone has ever seen. All right. Don't use a PO box. Next, like I said, it can be home based, but if you have an office, put that. Now you have these five things: bank account, phone number. Well, there's four. I didn't get to the fifth one. Bank account, phone number, email, business address. The fifth one is a website. It could be a one-page website that has everything listed on it, except obviously the bank account. You want that posted everywhere, and anywhere where your information online pops up needs to be there. Those five things have to be in DMB matching for you to actually take the next step. The next step is just applying for, let's say they call it like tier one credit people. So I'll give you a couple easy ones. Some free game right now. Uline is pretty easy. Best Buy, Staples, pretty easy. There's a bunch of them. You basically apply for business credit and business credit only. And you do that by using either your EIN or your Dun& and Bradstreet number. Do not put your social on there. If you put your social on there, you're not applying for business credit. Get the business credit, use it, pay it off, use it, pay it off, and then go apply for more. Every 3 to 6 months, ask for an increase. Same thing that you do for a line of credit. You're well on your way to building business credit. Now, the other thing that really helps business credit and your taxes and helps you finance more equipment is actually financing equipment, right? Because that goes under the business. If you're doing it the right way, it's building comparable debt, it's giving you the tax advantages,
Mhm.
and it's going under the business. In fact, I just refied, and please don't ask me to do this. I don't like doing these deals because I don't think it gets people the benefit of a new purchase. But basically, if I did a husband wife um, situation where they were buying vehicles for the business, but using like on their person, like they were signing for them. They wasn't going under the business name, and so this was bringing down their credit a little bit. And they had good credit, and they're like, "Hey, we want to build business credit." All right, well, what did we do? Do you want new vehicles? No. Okay, well, you have these. So we basically refinanced the vehicles that they had that were on their person into their business. Now, what I don't like about doing that is business financing is usually higher rates, okay? Because it's riskier, it's a little bit more expensive. So I told them you're going to be taking either 0% or 2% and increasing that a lot just to do this. They were good with that. Again, somebody else probably isn't going to say that, but me, I said it. And you know what the reality is? It's going to wash out because they're on now a lease with a dollar buyout. So those payments are tax deductible.
Mhm.
So the cost difference is absolutely going to wash out in the end. Uh, and it's going to build their business credit, but that is not like a clear like win for me. You know what I
Mhm.
mean? That's a good one. It helped, but a better one would be if they were buying new vehicles and maybe sold the old vehicles. And I suggested that, but they really didn't want to go through that.
No, that's great. That's great. But I was thinking about, I mean, our business vehicles. That's something, I mean, we write off too. And I was going to ask you too, obviously, buying used vehicles, the tax savings isn't as good as new, right? Or is that
No, well, all right. So I'm not an accountant. Okay. This
yeah.
is this is a conversation I have with people a lot. I'm not an accountant, so anything I say, you need to check against your accountant
Yeah.
or with your accountant. All right. Same thing with legal advice. You shouldn't be listening to me, guys. However, in my experience, I think why that's unclear is Section 179, and I don't know
Mhm.
how that's written out. Like I don't know how it's written out in tax code, right? I know over a certain weight you can write off. It was a full thing. Now I think it's 80%.
Yeah.
I don't want to, there's going to be somebody that's going to come for me here. All right, being a Mr. Know-it-all. But here's what I would say. I don't know. I'm going to take out 179. I'm just going to go straight finance. It doesn't matter if it's new or used because it's the structure, right? So when you finance equipment, you can do an equipment loan, which is a straight finance, right? And in an equipment loan, you're writing off the interest, plus you're depreciating the asset. What I do is a lease with a dollar buyout. And when I say when I do it, I mean 90% of the equipment transactions I do, I structure this way. And I do it because you get great tax savings. I do it a lease with a dollar buyout. Now, if you look at the terms are almost identical to a purchase or just a loan. Like the rate's going to be the same, the payment's the same, the terms the same. The difference is one's written as a lease that you buy at the end for a dollar. That's automatic, mind you. Not do you want this? It's okay, this is yours, here's the title. Okay, or here's the lien release on the title. And what that does is because it's structured as a lease, you can actually write off the entirety of the lease payment.
Mm,
So now, yeah, you're paying a little bit more on rate. Well, not really. I mean, if it's a finance, there's no difference in the rate between that and the purchase. But I'm talking from the business to personal standpoint, the business rate's going to be higher than the personal.
hmm
But you're getting that tax write-off of, hey, this $1,500 a month as a payment is getting written off.
hmm
And then the last one is the lease, but we don't really offer leases here. And the reason being is I have to vet them way too much. And what I mean by that is there's so much gotcha language in a lot of the leases, like auto renewals. Um, there was a time in the payment processing space where people would go out and say, all right, I'm going to give you all new equipment. Okay, it's going to be whatever, $50 a month as a lease. The fucking cost of the equipment was $200. And these people were getting locked into 36-month leases, right? And they think they're getting a deal. There's a lot of lease companies. I found the dirtiest and the worst transactions primarily in leases. So I try to stay away from that.
I yeah, that the whole I'm definitely gonna look more into the so you basically with the lease and a dollar buyout, you can write that off monthly, you said too?
Not monthly. It's a
Year
lease. So
yearly,
that, yeah, yearly.
yeah,
So
yearly.
whatever that is. Now, is there some difference in the fourth or fifth year when you're ending it? Yes, there is. But if you're constantly buying vehicles in this manner or equipment in this manner, it doesn't really matter when it's going to end because you have a bunch of others going that way,
hmm
right? You have a bunch of others that are out on lease that are going to offset that. That's really the strategy.
Mm, gotcha. One thing I wanted to roll into too, obviously with the credit thing and so on. Let's talk about some of the financing challenges you're seeing the contractors have. Let's focus there. Our construction companies have that they commonly face. Um, how are you getting them to overcome these?
Great question. So there's a difference when I look at anybody in construction, commercial, right, or
hmm
B2B versus residential
Yep.
or consumer, right? The guys that are going and playing the commercial space have more options, believe it or not. Why? Because they can use invoice factoring a lot easier. Okay. Invoice factoring, instead of waiting 15, 30, 60 days to get paid, allows you to get paid today and doesn't really cut into your margins. What I mean by that is, they're typically going to take 2 to 4%, or if you're high risk, 5% per 30 days, right? So it's not cutting into the margins. It's getting you the money that you need today on work that you have already completed. And this actually keeps contractors, banks not going negative, and that's the one of the biggest things I see, right, is contractors waiting for payments can't
hmm
grow. Well, with invoice factoring, you're not waiting anymore. And what happens is because you're not waiting, you can take on more jobs and larger jobs. And so you get that natural growth without having to borrow. Because if you think about it, if I were to get you a line of credit, okay, to float these jobs where you're net 30 or net 60, that line of credit is going to work, but it's only going to work until you tap it out. You still haven't changed anything that is creating that challenge. What's creating the challenge? You waiting 30 to 60 days to get paid. Well, now you have a line of credit that worked temporarily, but it also added a payment, whether that's a monthly payment or a weekly payment.
Mm.
So it actually made the situation more challenging. And this is why people tap out their lines of credit and then they're in real credit, then they're in a real credit crunch. Whereas the solution would be working with a factoring company and getting 80% of your invoices paid in 24 hours and then waiting for the rest when your clients pay. Because then you don't have to borrow, okay? Or then you're actually borrowing for the right reason, the right reason being growth, right? The right reason is, hey, maybe we do inventory financing to get you the materials for the job. Maybe we do equipment financing to get you the equipment for the job. Or if you're commercial, we do what's called project financing, which is just using a commercial contract almost as collateral, where you can draw up to 20% of the contract value to get the job started, right? And then they're only going to charge you 5% a month on what you drew, right? And if you're a smart contractor, which most of you guys are, I know, the industry doesn't, you guys don't view each other as that, okay? Because I speak to enough of you, but you guys are pretty smart and most of you are very good with numbers. So then you can build your finance charges or finance costs into your bids.
Mm.
And then the people that you're bidding work for are never going to know that they're floating a job for you. All they're doing is paying the finance cost. What's the difference? Well, you didn't speak to me before you actually went and bid these jobs. You didn't know what was available. All right. So that's why, again, like one of the biggest things I believe in is relationships matter. You should have somebody that's a pro at finance. You should have somebody that's a pro with legal. You should have somebody that's a pro with, people.
Mm.
Okay. This stuff matters. So yeah, I know I dropped a lot of programs in there, but those are
Dude.
pretty, I'll tell you, for contractors, equipment financing is huge. Okay. There's a lot of ways. By the way, equipment financing also can kind of be reversed, meaning if you're sitting on a lot of paid off equipment that has value and you need to get money, you can actually use that equipment as collateral to get money on better terms, right? SBA loans are very common for contractors, but what I would say is specific to them and that a lot of them don't know about would be invoice factoring. Invoice factoring is a great program. Anyone that uses it and uses it the right way usually experiences rapid growth. Project financing, I can tell you that using the contract, being able to draw up to 20% of that commercial contract to get the job started, and then just getting charged 5% a month and kind of like a pay when paid schedule, that works very, very well for contractors. And then inventory financing or materials financing has worked very well. In addition to your basic, like, hey, line of credit, or even sometimes like working capital. That's what has worked well. Now, what are the differences between them? Well, it's kind of like your contractor showing up to a job with just a hammer. All right. You see your contractor showing up to a job with just a hammer, you should fucking run. Well, when you guys are talking to finance companies, okay, you better, you got to see what's in their tool belt. Okay. A lot of people are going to say they do SBA loans. Ask them a couple questions. See how clearly they can articulate the process, right? A lot of them are going to fumble on themselves. And some might fake it. You never know. But you want to, like, your business is a job, right? Your business is a project. You need tools to complete everything and different tools to build that home. It's the same thing in your company. There's different times to use these programs. So project financing is you have a big job or you're about to take on a big job and you need a little bit of money for float, okay, and to get in between things. That's where that comes in.
Mm.
Invoice factoring is for the companies that are growing really, really fast, that are working business to business or business to government, and they can't wait 30 days, 45 days to get paid. It's actually causing them issues. It's causing them to turn down jobs. It's causing them to be a lot thinner in the bank account than they should be, right? Or in inventory or materials financing. That's great for just a company that's very, very material heavy, but it has great margins so they can just keep buying material, doing the job, paying it down. Buy the material, do the job, pay it down. So the reason I'm bringing this up is it's not like a silver bullet. There's going to be different programs for different needs. Like if you're buying a building, that's a SBA 504, right? That's what you're going to do. Or maybe you want to use a 7A for some reason. If you're buying a company or you want to acquire a competitor, that's going to be a 7A unless there's property attached. And then maybe you want to do a 504. Why would you want to do a 504 over a 7A? A 504 can go longer, and right now the rates are there's a significant difference in the rates between a 504
Mm.
and a 7A. That and they're both SBA loans, but that might be why you pick one over the other. So these things matter, and it's how quickly can you learn about them, how quickly, and you don't have to learn about each one of these things. You just have to find a trustworthy person, right? A trustworthy company, right? Like it's taken me 15 years to learn this. And by the way, I didn't learn this stuff in college. Like they didn't teach any of this. They taught how the economy works, not how this shit works. This was all trial and error and me getting my ass kicked,
Yeah.
you know, over and over and over again. I'm not smart. I'm just so dumb that I keep walking through the minefield, missing pieces and just trying to, you know, keep dragging myself through it.
I love that, man. It's the same with construction too. It's like I didn't learn any of it in college. I had to learn it out in the field. I learned how to swing a hammer and do things just by doing it,
Yep.
And I love what you said there too, is that I really agree with you. Like people need to educate themselves on this. Obviously, you have that program. I'm going to share that program too. I'm probably going to buy that program because I need to learn about this stuff because it is confusing. And I think a lot of people fear, I mean, especially the older generations and stuff, they fear loans, they fear debt. Let's use that scary word of debt. We've been told don't have any debt, this and that. Debt is bad. And I think that prevents people from truly being able to scale their businesses at a fast pace because they don't know how to use these programs or talk to somebody like you that's willing to explain it.
I agree. And one of the things that I'll say is I see it all. I see the people that are almost addicted to debt. That's not a good place to be. I see the people that are debt adverse. They won't do it no matter what. That's an awful place to be. Okay. And very few people I see that are that adverse to debt will actually grow their business beyond seven figures. I'm just saying, there's very, very few. And even less are going to turn into like an Andy Frisella and grow into $1 billion company,
Yeah.
right? The majority of people use other people's money. To the extent that you want to grow, how well do you use it, and how efficient are you using it? I will tell you this: every single business should work and focus on their business credit. Every single business has to have a line of credit. Okay. Those are things that are non-negotiables that businesses need to have. Now, can you get away without having one? Yes. But should you? Absolutely not. Why? Because having a line of credit, it's there for opportunities, emergencies, and short-term things. Why? Because think about it, it's a short-term lines of credit are 36 months, right? You want to use things, pay for things over their lifetime. So inventory, supplies, marketing, adding people to your team. What are you're doing that on a daily, weekly, or monthly basis, right? That's
Mhm.
why you're doing it over a short-term financing program so you can keep spending that money. When you buy a home, you're not buying a home on a 5-year loan. Why? Because a home you're supposed to use for the duration or for your life. That's why you pay for it over 30 years. All right. That's a very quick, easy, fast rule where you want to pay for things over their expected life. That's why equipment financing is 3 to 5 years. That's why when people ask me, "Hey, can I use an SBA loan to buy this equipment?" I tell them I don't recommend it. You can if like what's the shelf life? How long do you think you're going to use that equipment? And if they say 5 years, I tell them don't do it. If they say 10 years or I'll be using this piece of equipment in 15 years, yeah, sure, fine. Use an SBA loan. You're going to get a longer term to pay it back, right? But again, this is just some of the minutia, some of the differences in that. And by the way, if you guys go through that capital tools program and you're crazy not to, I think we throw in a strategy session with it. At this point, you guys are actually, I'm actually losing money when people buy that if they're taking advantage of the strategy session because the strategy session costs more than what you guys are paying for. But I'm all for it because you guys will at least get to know us. And if you get to know us, I have no doubt that you'll at some point work with us.
Yeah, I got no doubt too, man. I love this. Last question before I go into personal questions to wrap this up. What about like how is rates and inflation affecting things too, as far as on your end? I think that's the rates are scaring people in a lot of ways, as far
Yeah.
as I mean, I'm in a very cash heavy area. And it's not as much in this area. I mean, you're pretty cash heavy area up in the Tampa area as well, but how does that affect everything with as far as contractors financing all that?
Well, any financing, right?
Yeah, exactly.
It's a great question. Here's what I would say. If you zoom out, right? And I went zoom out like 100 years zoom out. Okay. Rate, this is average. We are in an average rate
Yeah,
period.
yeah.
People don't understand that. All right. Like 80s were very, very high. What's unique about us and what kind of wipes away traditional thinking and rates is we dealt with the '08 crash and then we dealt with the COVID bullshit,
Hmm.
right? And in both of those periods, they had to drop rates to really all-time lows, right?
Yeah.
Think about it, the disaster relief, the EIDL, which when that came out, I was working 7 a.m. to probably 10 p.m., right? Getting people that loan. And not just me, everyone in my company. And it was crazy. Because apparently like Tony Robbins' group found like his accountant is Tyler McBroom handles or helps Tony and speaks on Tony's stages. They didn't have an outlet for that. So that whole group came and we were doing all those EIDLs and it was round the clock. So I'm saying that just to say 3 years, 3.75%, you can't get a mortgage for that today,
Mm.
right? And this is what people have in their minds is like a benchmark. Also, people use what they're paying for the house as a benchmark for business lending, and it really truly isn't. Like right now, the SBA's Prime Plus, it's probably sitting somewhere around 11. Okay. If we were to do like a 504, you're probably at around 7. Lines of credit, I would tell you a line of credit, anything that is Prime Plus, like let's say starting at 12, like mine sits at 12. Anything from that 12 to let's say even 20, low 20% simple interest, kind of normal now, which is crazy. So it's not really about rates because everybody has the same playing field, right? It's like, hey, if I'm going to go to rink A versus rink B, I'm still playing Bill. The ice is the ice. You have to deal with the same ice that I have to deal with.
Yeah.
Okay, that's just the environment. So, are you going to be smart with your money? Are you going to use financing wisely to get a return, or are you going to mess around with it? The biggest thing is, and this is how I tell everybody, if borrowing this money is making you money, you're good.
Mm.
Okay. Obviously, you want the best rate, the best terms. You want to make sure you're in the right program. But ideally, if whatever you're doing with the money is bringing in more money than the payment, and whatever you've done with the money is producing a higher return than what the money costs you, those are the first two boxes you have to check. And then it's making sure that everything else works out. Because if one of those two things don't hold true, well, then you're going to have a problem or a potential problem if you're not aware of that. Okay, so those are the two biggest factors. And that goes back to the people that are debt averse. That's the first thing I'm asking and figuring out, like, hey, does this even make sense for you to take? So that's what I would say is a pretty big factor in that. And then rates, like lending hasn't slowed up. People don't need money less because rates are higher. If
Yeah.
anything, they need money more because there's not a lot of liquidity. And people don't have what I would say discretionary income to spend. That's why we're seeing right now a lot of the home services, okay? They're crushing it because people need to be able to flush their toilet. People need the lights to come on in their home. People need their home to be a certain temperature, okay? They don't need all the bells and whistles, right? That's what we're seeing. I hope that helped.
No, that was huge, man. This whole thing's been awesome. It's a lot of information. I highly recommend people go on your course too, because like I said, I'm definitely going to do it just for the knowledge of learning all this stuff. I need to know it. I need to know it more. I mean, every business owner should know it. I think we lack on it. So this has definitely helped. I want to wrap up with some personal stuff that I always do with everybody. This question I love. I get a different answer every time. So, what about you personally? You're building an amazing company and brand that continues to grow each and every day. What lessons have you learned throughout your journey that we should all apply to our own businesses or lives that can help us grow?
I'm gonna go with something really, really basic, right? And it's been a theme I've said a couple times here. Just keep going,
Mm,
right? Like you don't lose when you fail. You lose when you quit. And there's been a lot of times that I have made a lot of mistakes, both leadership, both with my company, like family. I've come back from so many different mistakes, and it's just because I haven't stopped. I had an investment into a gym. This was probably 3 years ago. I lost 600K. I had an investment go sideways on me for 700K right after I recovered from that one. Okay. And when things go wrong, you can either sit there, lick your wounds, poor me, but that's not going to fix anything. Just
mm,
take that next step. And a lot of you guys are sitting there right now in not the best positions. I understand that. A lot of you guys are kind of looking for, hey, what's next? Or how do I get out of this situation? Or how do I get through this? I'm telling you, the answer is take that first step. Okay. Even if it's in the wrong direction, take the step, recalibrate, take another step. That is going, and I know it's simple. I know it sounds stupid, but I hope that resonates with one or two people that really need to hear that and that gets them to take that step.
I don't think it's stupid at all, man. I think everybody needs to hear that over and over and over. I mean, God's going to give you, God's going to give you as much as you can handle. I mean, that's the thing. And it's like I've been kicked in the balls. I don't know how many times you have too, but if you don't get up, then you fail. If you get up, then you just keep going. It's a life lesson and it's something, losing money like you did. That's a life lesson. You're probably never going to do it again, or if
I'll
you
fucking do it again. I'm a
or if you
dumbass.
did it, yeah, or if you did it again, at least
I'll do it a different way. I'll
yeah,
find a different way to
exactly,
fuck that up.
exactly. So it happens to the best of us, brother. Another question, real quick, is where are we going to see Jonathan in 10 years from now? Who will you be?
I actually hope that I don't hope integrated will be a brand name in everyone's home. I will have a nonprofit that helps support small businesses and especially like the startup ones. And it's something that I was called, or I thought I've been hearing the voice. I haven't done it yet because, like, when we saw all those riots and all the bullshit that was going on, and the political tensions, which were just garbage and dog shit, and you see like these small businesses being impacted,
Mm,
like who the fuck was there for them?
mm,
Okay, how are they rebuilding? I want to raise money and have a fund for people that go through shit like that.
yeah.
Right. And what I would almost do is like I've thought about turning this into like a mini incubator where like, hey, I'll give you the consulting, the guidance, all this stuff, but you have to put in X amount a month and you have to use these services from us. And all of this goes into a giant kitty or fund that is a nonprofit that we can actually go and use and support small businesses who are going through something or have an extenuating circumstance. So that's something I do want to set up, and I'm going to set up in the future. But I just want Integrated to be a household name. I want my kids, my family to know and love God, and they do. And I want to be able to make the impact, but still be present and be able to enjoy my kids as they grow up.
Mm.
That's a hard one. And a lot of people most people it's either or. I am doing both.
I got no doubt it's going to happen, man. After listening to you, I can tell your passion too, and I know the listener is going to be able to tell your passion about what you do. Because, like I said, I've dealt with a lot of people in your industry. I haven't heard one that's as passionate as you and wants to, because, and I'm the same way on the building side, man. I'm just
Yeah.
passionate about doing it the right way, and
Yeah.
I just hate when people get screwed over. I can't stand it, and there's a lot of people out there that are, and it's people like us that it's going to take to try and change the industry. So I commend you on that, man. I got no doubt big things are going to happen, big things ahead too.
Thanks,
Um,
brother.
to wrap this up, to just where can people connect, find you, where they can
It's
find
just
you?
Jonathan Fedora on every platform you could think of. So Facebook, Instagram, LinkedIn. If you want YouTube and you want a bunch of uh, great content for free, just go to my integrated business financing YouTube. I think we have like 800 videos, and
Mm.
it's mostly tutorials and my podcast. Sometimes it'll be me ranting, which could be interesting. Uh, but for the most part, it's my podcast and all of my education for business owners that is out there for free.
That's awesome, man. Now, definitely, I'll put that in the show notes as well so people can link that up too. But no, I appreciate you coming on and your time today.
Thanks, man. I appreciate you inviting me, and we should definitely do this again. This is fun. This was
Yeah,
well thought out, and I had a blast.
yeah, man. We'll definitely do it again for sure, here in the near future because there's a lot of stuff to absorb with this side of things, and I think people need to really know what to
Oh, we
look
didn't even get
for.
into it.
Yeah, we got a lot more left. So stay tuned, everybody. But with that being said, thank you all for listening. Share this show, goes a long way. Friends, share it with your friends and family. Like it on YouTube and everywhere else. And then also 5-star reviews on Apple because that's what this one deserves. We appreciate you, and we will see you guys on the next episode.